Today, we're talking about Lucid Motors falling out of favor with the market, their car is earning much praise from critics, and if it's the perfect time to buy during this beatdown. All this and more on Morris Money. Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. Today, we're talking about Lucid Motors falling out of favor and if it's a potential great time to buy. This video is based off an Investor Place article, so thank you. Every new hopeful electric vehicle company is trying to differentiate itself from the herd. For Lucid, it seems it chose a swanky dealership name. But while a studio location is unusual for a point-of-sale spot, it's not the special sauce behind Lucid stock, nor is it the long range on a single charge, because eventually that advantage will fade. What is most special about Lucid's strategy is that it is concentrating on international growth. The company is quickly focusing on broadening their reach even before starting. But this brings the conversation back to the current bottleneck, which is production. Per the company forecast, their best effort this year will be fewer than 14,000 vehicles. In order to put a dent in Tesla's increasing advantage, it can't miss a beat. Any news of delays on that front will certainly put serious dents in the Lucid stock price. On that front, so far, it has been a wild ride for investors, but extreme situations almost always normalize in the long run. The fans love it too much, and the critics love to hate it almost as intensely. This raises the difficult dealing with Lucid stock for most normal investors, but we can choose to simplify things depending on our timeline. Those looking for long-term returns should just ignore the short-term gyrations. However, such investors should pay attention to their entry points to a certain degree. After all, it's important to make sure you're not stepping into a hornet's nest. The point is not to find surgically perfect entries, but to avoid the stints that are more obviously vulnerable than others. For example, those who rushed into full positions late November were obviously buying into a prior failure zone. Lucid stock had collapsed nearly 65% from those levels earlier that year. Their buy and hold argument probably was that in the long run, it doesn't matter. But if they had waited just a bit, they could have owned double the shares for about the same price. In practical scenarios, prospective Lucid buyers don't need to find a perfect bottom, but a reasonable one. Equity prices have been inconsistent, so it's best to take positions in small pieces. This leaves us room to add at different times to get a better overall average base price. Successful investors often use this method as a better alternative than averaging down. Fundamentally, Lucid stock still doesn't have much to offer other than massive expenses. This is understandable because it is bringing a brand new product to market. The company has already delivered its first wave of vehicles but still hasn't sold en masse. Meanwhile, its pre-sale orders are 25,000 strong, so demand will not be an issue. Lucid is likely suffering from the global shortages, so management is not completely to blame. In other words, even though the company is falling short on some milestones, it's not proof of incompetence. These temporary hindrances will hopefully abate soon and enable the company to operate under more moderate conditions. Even other electric vehicle companies like Tesla, which has been falling short for years, are finding the challenges too great. Now, some may be wondering, is there opportunity in Lucid stock this quarter? Technically, Lucid stock is showing an important line of support. The $20 level, which is now broke, is too easy a mark for prospective bears, even though the bulls have managed to hold it. If it falls, the downside potential could be significant, which it has. These are agnostic comments that would apply to any stock chart, so fans of Lucid shouldn't take too much of offense. If machines are truly in control of most of the action, this becomes a self-fulfilling prophecy. The bearish scenario has not triggered yet, but the bulls need to realize that it's lurking. Luckily, buyers stepped into it at $16 last September, and the effort resulted in a 250% rally. On a potential positive note, Lucid may also have a more complicated bullish pattern that suggests a rally towards $34. However, those won't pattern triggers on their own, and they would need help from other angles. Most importantly, the stock market is teetering on edge for numerous reasons. From a trader's perspective, a dip into $16 may prove to be an opportunity to pounce on a tactical bullish setup. The idea from there is to attempt to double it. However, the term tactical means it's not an investment, so it requires strict stop-loss settings. From an investment perspective, the buy and hold crowd can ignore the short-term challenges. Let me know what you think below about Lucid. Now that it's under $20, I definitely plan to increase my position on it as it's too good not to. Please don't take this video as financial advice, and thank you for watching Morris Money.